Hey there, boo-boo. You gotta get the pips and put it in your basket. Morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and oh my gosh! Turkey kept interest rates unchanged. Oh my God. Oh, wait. Stay humble, stay calm, stay focused. In the long term, and never risk money you cannot afford to lose. What did Ed Dakota say about the news? Something like he just ignores it. Of course, when you don't have any risk management, you might as well ignore everything. Hi. Oh, you know what? I didn't put my business card up there. Hi, my name is Wayne. I am here it is, 3, 2, 1, boom. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Please open a demo account or a live account. Show your loyalty and respect for these webinars. If you're benefiting from them in any way, even just entertainment, then you have a moral imperative to open up an account. Did you guys enjoy the FOMC event yesterday? I gave you another 2 hours of my life for the price of free. And by the way, I don't consider my time free. I don't have free time. Right? So don't be lame-o, don't be a scumbag, don't be a freeloader. Open an account at TradersWay just out of respect and loyalty and common decency. And then what we'll do is we'll win you over with fast execution. Right? So we've been through what? The S&B crisis, where large retail brokers essentially went out of business. Not TradersWay, stable as can be. Went through Brexit, stable, no problems. Been through rate hikes and tapered tantrums, and now we have hawkish holds and never a problem. Steady as a rock. Give us a shot, man. We want to fall in love with you. We do these sessions 7:30 in the morning every single day, Monday through Thursday, and every Friday at FX Street, 7:30 in the morning. I am there. For premium members, I'm also Forex Speaker of the Year, and probably, most likely, I will also be the keynote speaker at the upcoming Forex Trading Expo in Dubai. Cool. Let's get to the charts. What happened? Nothing. Okay, no surprise there. Right? No surprise there. By the way, yeah, if you are if you are going to be in Dubai for the Forex Expo in the Middle East, and maybe after the event we can do a meetup at my favorite cigar bar. You can have a coffee or tea. They don't serve alcohol. Coffee or tea, and a cigar. There's a nice seating area outside. It's right across the street from the Ritz-Carlton in the Marina. Really? Wonder why Wayne likes it. Yeah. So, anyways, yeah, if you want to meet up and hang out, it'd be great to kiss your hand and shake your baby. All right. Oh yeah, lots of great trading ideas on Forex.Today. It's starting to blossom. Your trade analysis is getting quite good too. So thank you very much for your interaction. Hopefully you guys are leaving each other feedback and thumbs up and likes, but most importantly, like following each other and adding questions and hey, what about this and what about that? But there's some very nice stuff up here. Look at just like an amazing amount, right? Just amazing amount. Look at all the different, a lot of your charts look a lot like mine, and some of them don't, and some are similar, and some are different, and just fantastic. So big bravo. It's getting good. One of the things the programmers are working on is when you follow somebody, right? So let's look at Jimmy Boy, the J-Man, James. So if you follow James, follow. Oh, I have to be logged in. All right, so if you follow him right now, every time he updates or makes a new post, you get an email that says, "Hey, James just made a post." It doesn't include it includes a link back to the post, but right now it doesn't include a thumbnail. Like I want it to include this image here, so you know what you're getting into. And I look at that and I say J Lo, and I wanna take a look. You guys know what a J Lo is? It's a big wide bottom. Right? You get it? Wink, wink, nudge, nudge. Yeah. So I'd like to see that J Lo and say, "Dang!" and link directly to this site. So that's one of the major powers of the website. So I'm having them add that thumbnail to the email, and it's lots of custom code and stuff like that. But you're worth the effort and the investment. What a pretty chart, though, Aiden. Thank you, James. So again, J Lo, right? Big wide bottom, and then what he's thinking is up and down and around, which is pretty cool. And I like the multiple time frame stuff going on here. Yeah, that's pretty neat. And this particular setup, and this particular setup is valid only when you're at support that would potentially reverse a market. Okay, so you don't just do it because it's doing that. Because most of the time in a trend, what it'll do is it'll move down, consolidate on the higher time frames, the moving averages catch up, and then push it back down again, right? And the downtrend should continue. But as you see, what James points out, not only is this a green area, which is probably what weekly or daily pivots, you swing over here, and what he's got circled is a monthly pivot, and then up here he's got like probably what a 50, 55 EMA. So what he's thinking is up to that moving averages on this time frame. But remember the base now, the bottom, the support is the monthly. So he's like, okay, so kick up the support, go up to that moving average there, come down, hit this moving average and rock it up, breakout. Yeah, sounds plausible to me. Oh, that's the target on that time frame? Yeah, sweet. Right on. If I was logged in, I'd thumb that up. I'd thumb that old. Anyways, excellent analysis. Thank you, James. So here's what we left with yesterday before the Fed news. This is our analysis, if you recall. Life is great, life is grand, life is good. Okay, let's turn this thing off. Okay, so our analysis had told us this part. I think we were like here. Would you concur? Brandon says, yep, sure enough. Russ, you probably tried to sign into this page, not the. Yeah, no, there was 250 people. How was the FX Street coverage of the FOMC event? Change my highlighter color. Okay, so anyways, Not as near as interesting. I admit it, I had a good time. We had some fun, lots of songs. All right. Okay. So I think this is kind of where we left off yesterday about this time. Okay. Kick off atop here. As you can see, I've identified this area. This area support for something to the left. I don't remember what it was. And then we kicked off here, right? So this is 24 hours ago, essentially. And our plan then was that it would come up, it would retrace. Maybe I should have a lighter color. I don't know. I think you can see. It would retrace up to the 382 to 618 Fibonacci retracement area. And that we would also pay attention to this area here. As you can see, I've highlighted as previous support, which could now act as resistance. And that's at our first, aggressive line of shorting, which is the 382. But really what you should look for is the red candles after you're in the sweet spot, right? Neat. What else can we observe here? A 1, 2, 3 for an entry? Well, you have this and this. So one of the things is if you're a bull, you did have an entry, right? So one of the things I forgot to mention is, since I spent so much time on it yesterday, I said pick a team, be a bull or a bear, and if you're a bull, it should be easy entry. If you're a bear, it should be an easy entry, right? Psych level, 27.0000. So yeah, I'll give you that. That's right around the 50%. That's in our sweet spot. Ideally, it becomes, way overbought without making a bigger higher high. Like if we were above this area, of course the Stokes would be overbought. It's an uptrend. Everyone's buying. Why wouldn't it be overbought? Everybody's buying. But not everybody should be buying in a downtrend, right? You see the big difference there, guys? Why is it so overbought if it's a downtrend? And we're at resistance, and we're at 2,600. Ain't nobody going to buy it now. It's overpriced. In a downtrend. That's the logic, right? Some people like mix up their Stokes and they're selling rallies in uptrends. And they're like, look at the Stokes, eh? Oh, is that right? Yeah, I find there's a big difference to that. Okay. So anyways, so there's a lot going on here. And then what happened? And keep in mind, this is what it looked like. I think we were even lower than this. But this is what it looked like 24 hours ago. And the plan, was to sell right between the 382 and 618 with a roll reversal on a psych level in a downtrend. Right? Okay. Oh. Could be an opportunity. We don't know yet. But do you see how the psych level comes into play now? Psych level being here. So just in general, remember like we were talking about support resistance earlier and maybe you don't need so many indicators. It's like if you're a bear and price is rising up, you can just kind of assume that when we get close to that psych level, it's going to drop, right? And I have taught you the 80-20 rule, right? You know that one, right? Where a bear is going to sell basically between, sometimes it's 80 to 00. Really, it's more like 90 to 00. And then their stop's going to be 30 pips above that. Okay, so then you got to go 00. So you sell at or near 00, not necessarily above. You understand the difference? Like you sell at 90, 95, 98, 99, 00, but you're not selling at 13. Or God forbid, 27. Sometimes, when I'm reviewing someone's trading, I'm like, what the hell why are you in this at 27? It felt good. I mean, 27. Who enters a trade at 27? 50 I get. 00 I get. 27? Could you be more in the middle of a range? Right? So anyways, this is, you should have this in mind this whole time, that it'll probably retrace back to the psych level, and that's an area you'd want to sell if you're a bear. And your no-fly zone, if you will, is you don't want to sell higher than that. Let me go yellow or yeller. Okay, you don't want to you don't want to enter trades in here. Okay, and then 20. Yeah, like this is a dangerous area. Okay, if you're going to sell it high, you probably want to just trade it off of this, but even that is pretty dangerous because it's at a weird area. There must be a pivot in there or something. But you want to be short right around that psych level, and ideally just before you hit it, not way after. So what you want to observe is, candle by candle, you're watching the 27 and you're thinking, if it falls, I'm going to sell. Wait for it. Wait for it. Boom. But, it's in here, right? I'm trying to get just that one candle. Come on now, Bubba. I won't do it. Come on. I can't do it. It won't do it. Come on, Bubba. I got this fancy mouse, and it's good for moving 8 screens at once, but it's not good for moving one candle. There we go. All right. If you were already thinking, I want to sell, 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 sweet spot 618, psych level, I want to sell, 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 I want to sell. You understand how important that candle would be to you? If the whole time, this whole 3-hour move or whatever it was, this move from 72 to 82 to 92 to 127.02. The whole time you're thinking, I want to sell, 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 I want to sell. Red candle. Huh. You may not have been alone. You are not alone. I trade with you. Although you're far apart, you're always in my heart. Right? So that's called a trade plan. That's your tactical entry here. It's not a strategy. Your strategy is you're a bear. That's all. That's right. King of pop. Alone, alone, alone. Oh my. Right? So anyways, that's how you trade, guys. I want to sell, 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 I want to sell. Right? Oh, 90, 94, 94, 95, 95, 96, 97, 98, 99, 0, 0, 0, 0, 02, 0, 0, red candle, boom, 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 boom. You're like, Wayne, I don't even have a 5-8 cross. Well, I don't have a 5-8. Why would I? You see? Trying to simplify the charts for you guys. The pretty colors are nice. But look, the whole point of this chart, well, there's two. You're a bear. You've already decided. Done. Easy, right? Strategy done. Now, when do you pull the trigger? Well, it's just made a lower low. I want to sell the lower high. It's going to retrace back right around the cycle level. And if I see red, I'm going to sell it hard. There you go. Cool. Anyways. Then the news made it nice and messy. I think that's what it looked like right before Brexit. Not Brexit, FOMC. Ugh, sorry, not enough sleep. Anybody lacking their normal amount of sleep? Okay, all right. Okay, now check this out. Isn't that an amazing coincidence? Now, the interesting thing is you will not find someone else trading the 121.4. I made it up because I'm self-taught. And when I popped it on there to see if I was doing fibs right, because there was no literature on Fibonacci. Isn't that funny? There was no literature. I had to figure it out. Look how easy you have it. Okay, all right. So what is the 121.4? Okay, well, um, I was doing things like, what is 100 minus 618? 382. What's 100 minus 382? What's 100 minus 50? Okay, see the relationship? So now what is 100 minus 786? 21.4. So you take the 21.4, the 382, the 50 if you want, and the 618, and you put them above the fib peak to make your extension. And I think that makes logical sense. That the ratio to the the 786 to the 121.4 is similar to the 382 to 1618 or the 618 to the 1382. Can you see how a self-taught person could come up with that relationship and ratios? I mean, it actually makes sense. Yeah. No, I'm totally wrong. But so I throw down the 121.4 and I start observing things like this, like it kind of looks like somebody's looking at it too. But that's also confirmation bias, right? But I threw it out there and I'm like, oh man, this works. Done. Next. And it was like years later that I saw like someone else's Forex stuff. I don't know, because why would I watch somebody else? So I really don't know much about what other people do. Couldn't really even care. Um, and they're using something else. They're not using 121.4. It's like 127.6 or something. I'm like, what the hell is that? That doesn't make any sense. I don't know. It was in the book. I'm like, I get 121.4. Makes sense to me. So, anyways. So our goal yesterday was to get it to 126.41. I'm sorry, it only went to 126.40. Sorry. I know I was tired, with I don't know. But, there is room for improvement and I'm willing to continue trying. Robert Miner. I ain't no Robert Miner wiener. I don't know who Robert Miner is. It's probably super famous. Super famous, right on. All right, so yeah. So, anyways, and then check this out. This 618 we identified yesterday before the news. More than a 30-year veteran? Was he still in Vietnam? They left him in the jungles of North Vietnam. he's in Cambodia fighting the commies. He's been trading for the This is a long mission. Brazil inflation. Who cares? All right. So anyway, so we identified the 618 area yesterday, 24 hours ago. Check out how history likes to rhyme. It may not repeat, but it rhymes, right? Check that out. Check that out. And by the way, the 50%, the 50%, the 50%, right? The 382, right? The 382. And it makes it all the way back to the 618 again. Isn't that interesting? Or you could just call it the 27 psych level. See, it doesn't matter. I don't really care what you call it. Oops, come on. I wanted the highlighter here. All right, but it's part of technical analysis to have a plan and think ahead and prepare. And you're preparing to be right as much as you're preparing to be wrong. Holy smokes. Did you guys see the Baltic Dry Index? We're approaching 1,000 again. Huh. That's interesting. By the way, did you guys buy a lot of commodities yesterday after the FOMC meeting? I kind of told you to buy commodities. Gold is up, copper's up, oil's up, Canadian dollar's up, Aussie dollar's up. Just want to make sure. Just want to, the whole wink, wink, nudge, nudge stuff. Just, dollar down, longer for lower, commodity rally. Just makes sense, right? All right. So, anyways, And there are two things that could possibly happen here, right? If you're a bear, it's going to do something like this, right? And if it stops being bearish, it's going to do something like this, right? Oh, Brendan got the kitty cat. Right on. How about Mexican peso? Anyone be brave enough to do that one? Did anybody buy rand? Boy, if you were going to make a large rand purchase against the dollar, now would be the time, huh? Because if you wait a month or two, kiss your rand goodbye. So anyways, boop. Look at the fractal geometry here. Do you see it? Lower, low, off of resistance, most importantly, psych level and all that. Lower, high, lower, well, right, lower, low, lower, high, lower, low, right? Lower, low, lower, high, lower, low, lower, high, lower, low. Three-wave correction, right? Lower, low, lower, high, lower, low. Okay? The fractal nature of the market is such that it also did this. So this is a 5-minute chart. Let's say you're looking at it on an hourly chart or a 4-hour chart. Here's what happened. Ready? You ready? You ready for this? That's what happened today. So you don't have to get caught up in all this noise. On a 5-minute chart, it could be, 1, 2, 3, 4, 5, 6, 8, and 10, 12, 14 trades yesterday or today, right? Or it could be one, right? What is it? Lower low, right? In here. You're also going to fib here to here to here. Looks about like a 618. You're heading down again, right? You see how it's just the only difference here is what time frame you're on. Right? Neato, right? So the trick is you got to learn that so that you can see this, the bigger pattern on the higher time frame, and then drop into a smaller time frame and say, I'm going to sell the retracement into here, second chance, roll reversal, 618 Fibonacci retracement, and down. right? Because of this move from the psych level, it hit the resistance, it respected it, it fell 40 pips. So now you're going to take the 618 because it's made the low. The low here is lower than the low to the left. So now you're going to short to a lower high to the right. Okay? You see what I mean? Do I use volume in my analysis? I do not, Paulie. If I was trading stocks, probably. Yeah. Not, no. And I already know they're there. How do I know? Because they sold here. And if I'm wrong, we'll be up here and I'll be out. And by the time this drops, your volume will spike. But I'm already, I'm already done, right? So, but the red candle tells me everything, right? There's the volume. 608. Okay. So like down, 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 up, up, and then you see red. You got to be short, man. Right here it is. Right. All right. So that's where we are now. So, anyways. So, la da da da, and so what I was saying here is, it's just one of these. Okay. Now what? You can call it a 3A2, right? Or you could call it a 50%. So here's my number. Call me maybe. Call it what you want. 3A2, 50%. Doesn't matter. Okay. So maybe we head down, hit the 121.4 and the psych level of 126 today. What do you think? Could be. Sometimes I see things like this and say, what? 14? They must have slightly different pivots because they calculate maybe, they use Sunday or they don't use Sunday data, whatever, right? But so this is really decision time for you because I think this is maybe about 50-50 that comes down to here, and it kind of feels like it wants to do that, but don't be shocked if it does this. Just don't be brave. Don't add a third one and a fourth one and fifth one and say, this has to go down. It doesn't have to do anything, especially when you're in the green zone. Green zone means up, bro. So anyways, neat little, discussion on trading your bias, staying with the trend, and price action. So a piece of advice would be to pay attention to psychological levels and observe how price interacts with them, right? And learn. So listening to me and trying to figure out what I'm talking about all the time is probably not the most efficient way of learning. I think what you should do is say, well, that was really interesting what he just did. So then you take one little piece of it, like, I need to pay more attention to psychological levels. Okay? Ken, because everyone was already watching pound dollar, so I did pound Swissy just because I knew no one was watching it. All right, so you say, wow, I need to pay more attention to psychological levels. I could see some validity in what Wayne was saying there. And then what you should do for the next month, all right, is do something on your charts that really makes psychological levels stand out. Like giant, maybe you do things like you highlight them with the shadow boxes and stuff, right? Or you throw down a horizontal line and make it super pink and super fat. And you just say, 127, 128, 129. You just manually draw these, or there's probably some EA you can get that makes a big deal out of psych levels. But just pay attention and observe. And that's, to me, the best way to learn is intent, right? Cognitive intent, which means you know what you want to look for. And then when you open your charts, you go and with intent, with the intention of observing and learning from that observation that is very specific. Okay? And after a month, you could say psychological levels are important to my trading in a particular way. Or when I discuss them, then you could say, well, that makes sense. And I can see what he's saying based on my own personal observations. Some things maybe I don't agree with as much. Some things maybe I totally agree with. That other thing was new, so I'll go back and I'll observe that with intent. But you'll also find that some currency pairs respect the cycle levels more, and that has to do with basically basket trading. You know, like what percentage of British pound trading is actually pound Swissy, right? How many traders trading pound, for example, are trading pound dollar? Well, a lot. And how many are trading pound yen? A fair amount. How many are trading pound Swissy? Well, probably less than pound yen, and pound yen's probably less than pound dollar. Well, how many people are trading pound CAD? Right. Now you can open up a pound CAD chart, and what may be influencing it is the US dollar versus the Canadian dollar, US dollar versus the pound, and then everything against CAD and everything against pound. And then you put all of that together. Maybe no one has even ever traded pound CAD in their entire life. But pound CAD is moving, but not because they're trading it, but because the pound is moving against everything. And CAD is moving against everything. So it may not, if no one's paying attention to CAD, pound CAD psych levels, they may not be as important. Understood? But on pound yen or pound dollar, pound Swissy, you're like, whoa, dude, that's flipping right on the 0 0. Well, you need to know that. Not because I told you, oh, this is what Wayne says to do in this situation. This is what Wayne says to do in that situation. No, from your own personal observations. Okay? So here's my number. Call me maybe. We got the weeklies coming up in just about 15 minutes. Good advice. Yeah, cool. No, spank you very much. Jobless claims should be trend. Oh yeah, I guess we need to talk about the Fed. All right, so we're hawkish holding hawkishly. Janet didn't give as much of a green light for December as I would have liked. I guess they need to talk it up between now and the November meeting. And what now, because she didn't actually give the green light, like she didn't say, well, you better get ready to, the pricing in of a rate hike in December went to 62, but it didn't go to 82 or 92, right? So that means we got a couple of NFPs or 2 or 3 NFPs to get through. The election, of course. Several months of retail sales during the Christmas season. Obviously some more GDP data, some more CPI, PCE data. All right, that's cool. So we got that from now to December, and because Grandma Yellen didn't give the green light for a for sure liftoff in December, then we're going to be supremely data dependent. Understood? So fantastic non-farm payrolls, 210,000 jobs, 220,000, 290,000. Dollar just redonkulously strong. Boom! Also, you might want to pay attention to our no-fly zone. And I'd say there's a 10% chance maybe that we go to 120. 115 seems pretty reasonable. Wouldn't have any problems with that. Dump it at 114, dump it at 115. And, I'd say there's probably, I don't know, a 70% chance we go to like that 114, 115 area. Doesn't bother me, none. In the slightest. Doesn't make a difference. I just know I'm going to sell there. Isn't that nice? So you remember our conversation a couple of days ago? I don't know what the market's going to do, but I know what I'm going to do. It's not as, again, trading's not as difficult if you've already made the decisions, right? And I don't know if we're going to get there, and I don't know when we're going to get there if we do get there, but I know what I'm going to look for when I do get there, or if we do get there. But I think there's a small chance, dang, we're totally disappointed in the Fed. There's no hike, even in December, and we start to smell this between now and December, right? It starts to get really stinky. Retail sales not as good. PCE low. GDP low. Jobs report 130. Whoa. If that happens, we're on our way to 120. Pretty easily, too. Not a problem. And you'll be one of these guys that say, oh, man, I've been buying the dollar. I've been buying the dollar. Oh, but look at the interest rate differential. Look at the interest rate differential. Look at the interest rate differential. Yeah, right? Hey, my professor at Harvard told me the interest rate differential favors the US dollar. Uh-huh. That's wrong, of course. It's not the interest rate differential, it's the trend. And if the trend is no more hikes, then the dollar's weak. That's that. The trend is over. Now, and you also have to put in context. What they tell you to do in a textbook isn't wrong. We did drop from 150 on the Euro USD to almost parity. And now we're just sitting around for a year or two or three, waiting for the next move. You're just stuck on the 5-minute chart, right? I just met you. I must be crazy, but here's my number. Call me maybe. I don't know why I drew that. All right. So, oh, pound Swiss pound CAD. Oh my God. Did I draw that yesterday? Oh, no, that's a week ago. No. Anyways, somebody apparently thought the CAD was going to get strong. How funny is that? Funny like a clown. So we'll see what happens here if it does pull back or not. Not a good place to sell, at the very least, right? Pound Kiwi. Damn, I don't remember doing any of this. So I said up to resistance. This must have been yesterday. Wow, I'm really tired then. I don't remember doing this. Makes sense though. So I said there's an X here for some reason. Then it would go to here. Then it would come down. Then it would go up. And then it would go down. Oh my God, that's so confusing. It's working though. Does anyone remember doing this? Where's it? Am I just leaving notes for myself? Pound kiwi. Somebody thought commodities were going to rise yesterday, huh? That's strange. Would have stunk. Huh. What an interesting conversation we must have had. Too bad I don't remember it. Brendan says, yeah. All right. All right. So what do we want to do? I want to rock. All right. What do you do when the dollar weakens? Oh, I know what I wanted to do. Baltic Dry Index. Baltic Dry Index fell so much it was almost hard to believe. Now that we're back at 1,000, I'm like, wow. Baltic Dry Index. So let's take a look at that because I think that's interesting. In the news, Baltic Dry Index rising. Let's do Dry Ships Inc. Let me check that. Maybe they have a nice chart. Yeah, well, it's today. It's not the world's greatest chart. Yeah, it's okay. It's not as dramatic as I want. Hang on. I know you don't see anything. I'm talking to myself. Bear with me. We'll try CNBC. Yeah, okay, that's better. We're going to use CNBC on this one. Okay, Baltic Dry Index, the baddie, Baltic Dry Index. Okay, so you can see it was really low in February. It was like 250 or 300, which is just redonkulous. And today we just hit 900 and approaching 1,000, which we haven't done for really about a year. I guess it's been a whole year. So maybe there's a seasonality to this, which is interesting too. Maybe China is stockpiling. Who knows, right? But the Baltic Dry Index is an index of shipping prices for dry goods. Like, it's not a tanker, like an oil tanker. It's not a cargo ship with containers on top. These are like giant hopper ships full of iron ore and coal. Maybe grain, I guess, right? My theory is Baltic is only up because there are less ships in service, but that's all normal. That's all normal, Eds. But you can be right. There's no doubt about that, right? But there is a normal life cycle. So what happens is when prices fall to 200, and you have a bunch of ghost ships anchored offshore doing nothing, just sitting there and rusting, and it's costing you money directly or indirectly, what you could do is just scrap them, turn them into cash, and wait for the market to recover, and then take the cash and maybe invest that. So get rid of 5 or 6 or 10 ships that are old and outdated and inefficient and expensive to run. And the technology was low anyway, so you kind of had to upgrade it. So you just dump all of those, turn them into cash, and then when the market picks up again, you buy a modern ship with it. You see what I mean? So there's normal life cycle, and then when prices go up, everyone wants to build ships as fast as possible. And all of a sudden we get an overcapacity of ships. Cool. So Ed knows what he's talking about. So thank you, Ed. But anyways, we were down here, and that's really low. And now we're approaching 1,000, which is much different. Now you say, well, what's 1,000? Is that any good? Well, let's go from 1 year to 10 years. And it used to be, so there's 1,000 where we are now, 2,000, 4,000, right? 6,000, 8,000, 10,000, 12,000. It went from 12,000 to 200. What? Holy smokes, what? What is that percent-wise? So the high here is 11,700, some change, down to 291. Oh my God, right? That's basically what, 97% drop in prices? So that would not bode well for global macroeconomics. That basically tells you nobody's shipping dry goods around. China is just not importing coal from Australia or soybeans from Brazil or wheat from Argentina, right? Isn't that amazing? 98.3%. Thank you, Paulie. So that's not good for global macroeconomics, right? So Ed's saying, well, it's not actually new orders for shipping. It's not new demand for ships. It's less supply for ships. And that could totally be the case. I would like you to show me a number and say, well, look at this. This is empirical data that shows the number of ships have declined by 22% in 2016. And therefore prices are going up just because there's not many ships anymore, right? But still, going from 200 to 1,000 is a 500% increase. Now we got to go from 1,000, right? We're up 500%, but we have 1,000% more to go on top of the 500. So anyways, it's remarkable. Hey, approaching 900 or 1,000 is the right direction, isn't it? So is anybody new to Baltic Dry Index? Like you just did, you're like, wow, there's an index of shipping prices for things like iron ore and coal. How neat. Yeah, well, there you go. But can you see how that might be a canary in the coal mine, so to speak? Is some sort of measure of potential measure, not always, but that may point to whether global activity and trade is taking place. So, for example, if China is getting factory orders to make new stuff, they're going to need energy. And energy in China is still like 98%. I forget the numbers. I used to know. I knew last year. It was like 98, 97, 96% still. Let's say 90%. 90% of China's energy is created by coal-fired power plants. Now, they produce an amazing amount of coal. I think they have probably the largest coal production industry in the entire world. It's still not enough. So when the market is booming, they're using all the Chinese coal and they can't dig it out of the ground fast enough. And a few years ago, they actually had a problem where every truck and every train in China was full of coal, and there was actually, like, generally speaking, a supply chain traffic jam. Right? They couldn't move it fast enough. So, anyways, if the market is truly booming, even though they're the largest producer of coal in the world, they still don't have enough, which is amazing, right? So then they need to go to places like Australia or the United States to get their coal. And they're going to need to ship it somewhere. So Baltic Dry Index, if it's demand side, okay, if it's demand side, then that could say, well, then that's really probably pretty good for global macroeconomics, that there's global business activity. 252 on the claims. That's good. That's good for the buck. We'll look for dollar strength. So yeah, it could point to an increase in global economic activity, which would lead to an increase in demand for energy, especially if the demand is so high that you're outstripping domestic supply and you need to import. Okay? Well, there you go, Austin. So a few people learned something new. That's cool. All right. Cool. What do you use soybeans for? It's funny. I took my wife and kids to a Japanese restaurant the other day, and we said, "Yeah, can we have some edamame?" Sure. She comes back, and she has this bowl of soybeans, and she gives them to the kids. This is edamame. It is very good. And our kids are like, "What are you talking about?" My wife's like, "It's one of their favorite foods." My children have been eating edamame since they were like crawling on their hands and knees, right? But anyways, it's not necessary. Soybeans, are, right, are not. When you look at the percentages, soybeans are not edamame. They're not tofu. Soybeans are used for feeding cattle. When you look at it globally, think cows. So, yeah. Oh yeah, yeah, I mean obviously there's other uses, but if you had to summarize it, right? Right? You could say, well, iron ore is used for making pots and pans. Yeah, that's true. But if you sprinkle a little coal on it, it becomes steel. And steel is probably the biggest use for iron. What was iron originally used for in sort of the last 300 years? Railroad tracks, yeah. By the way, I had a friend many years ago, like probably 1995, 1994 or something. He's in Eastern Europe, like Slovakia, the mountain, the woods of Slovakia. And he's like, "Hey man, I want to go camping. This place is so beautiful." And people looked at him like, "Yeah, no, no. Yeah, here's the thing. We don't go camping. It's not something we do because our lives are horrible anyways. So like packing up in a fancy REI tent and going living in the woods, that's kind of what life is like every day, right? We just don't really go camping." He's like, come on, I gotta go camping. So, anyways, he's camping out in the woods all by himself, Eastern Europe. Fall of the Iron Curtain is very recent. He's out there by himself, and this guy comes out of the woods, kind of like a homeless looking guy, all dirty and you know just I don't know, in the middle of the night, approaches him as my buddy's sitting by the campfire. Now, would that freak you out? You're in the woods, sitting by a campfire in the middle of the night, and this guy stumbles out of the forest into your camp, and you're all by yourself? Yeah, right? Now, get this, holding two giant machete-sized knives. Now what? And he's babbling something. He might be drunk. He's babbling something in Slovak, Czech, Russian drunkenness. Yeah, poopy pants. And he's got these giant, like 4 foot long knives, one in each hand. And he blah, 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 in the middle of the night, out of the woods. Apparently, he's found some old railroad ties or railroad tracks are not hopefully not being used. This was kind of a weird time in human history in Eastern Europe. Found some iron train tracks, hopefully not being used, and he had smelted them down. Living in the woods, somehow got a fire or furnace going somehow, and he melted them down and hammered them into knives and were selling them for money. Run, right? Run, Forrest, run! Yeah, so he bought one. Yeah. Well, he did something. Yeah, Jimmy, I don't know. He must have had a furnace. You can make a furnace out of, fire bricks and mud. Humans have been doing it a long time. Yeah, I don't know. This guy, maybe he was all dirty from working in a smelting facility. I don't know. I wasn't there, right? He's an alchemist, right? But redneck steel. Right. Now, in Georgia where we do have rednecks, you can buy some nice hand hammered like jackknives and hunting knives. Beautiful stuff. I have a set of knives that were handmade for me in Japan. Cooking knives and stuff. I have one that slices. I have one that chops. I have one that does bread. I have a paring knife. I have each one, and they're beautiful works of art. Hand hammered, full, 1,000 layers of folded steel. Just beautiful. Just beautiful. I love that kind of stuff. And then the wood handles are just fantastic, and they're perfectly balanced. Just absolutely beautiful pieces of art. And every time I'm cooking, I appreciate them. Just love it. And then you pick up one of those German knives they say are so awesome. I'm like, this is forged steel. They just poured a bunch of molten steel into a mold. I'm like, this is dead to me. It wasn't hand hammered 1,000 layers. Get it. So they're actually basically Japanese swords, samurai swords. So yeah, I'm telling you, these are like the highest quality shun knives, if you know shun. Just absolutely fantastic, beautiful piece of art. Anyways, I don't know how we got there. Oh yeah, iron. Yeah, what do you use iron for? So you can track maybe global Baltic Dry Index. If I'm buying hand hammered Japanese knives, I mean, it took 6 months to get one of them. I mean, it was a big deal to get these things. Um, then I got to import them now. I wouldn't import them in a in the via in something that would show up in the Baltic Dry Index. But always think about it that it gets put in a box, and the box gets put in another box, and that box gets put on a pallet, and that pallet gets put in a bigger box, and that big box gets put on a truck, and then that truck goes to a port, and then that the back of that truck gets put onto a ship, and the ship goes somewhere, and the ship is going to require fuel and manpower and all that kind of stuff, and there's all these things that you can track. Like not long ago, I was telling you about suet sales and how that can get you into the right stocks 6 months to a year before the average idiot starts buying. so on and so forth, right? Are you thinking about this kitty cat? Yeah, well, here's what you got to do. You could do things like set an alarm and say, you know, if we get into this area, you should be alerted. It's not quite your sell zone, but you want to know before so that, you know, you can be prepared, right? So on this, you're going to have to assume Brexit is still bad. And then you would also going to have to assume that oil is going to go up, increasing the value of the Canadian dollar, pulling this down. But along the way, people want to buy back the pound or sell off the CAD. And that'll be for a week or so, and you'll be ready. Okay? Have you guys thought about next week? Started planning that technically? You just look out at a bigger chart, right? S&P 500 still looks good. They like low for longer, right? Because the stock market's increasing based on the low for longer. That gives the potential for an increase in demand for commodities because there's an increased activity if things are cheaper. That's why yesterday, once we realized that she was not going to say what we were hoping she would say, she didn't give the wink, wink, nudge, nudge, right? So then dollars weak, lower for longer on interest rates. Yield should go down. The stock market should go up. If the stock market goes up, and in particular the dollar weakens, because whoever priced in a rate hike in November is wrong. I mean, or in September, I mean. Now they got to get out of it. So the dollar weakens. Because the dollar weakens, gold goes up, and because of the potential increase in activity because of the lower interest rates, the ones that actually happened, not just with the Fed, but like the 30-year came down, the 10-year came down, all these different things came down, which means stock market goes up, dollar weakens, gold goes up, copper goes up, oil goes up, right? Chinese yuan goes up, dollar index falls. Do you guys remember talking about all of this yesterday? Yeah, right? And at first, I was watching copper. At first, copper didn't do anything. It waited and waited and waited and waited and waited, waited, and then started to move in that direction once it was clear Grandma Yellen wasn't going to raise interest rates and wasn't hinting that she was going to. So that was pretty interesting. And why is copper a metal to watch as well as gold? I don't generally watch silver. Industrial product. Can you be more specific? So I'll accept like building materials. I'll accept wiring, like plumbing. Yes, all these things. So if you're building lots and lots and lots and lots and lots and lots of skyscrapers in China, gonna need copper. Computers and other technology, gonna need copper, right? Just pipes, the wires. Yeah. So in this case, it's just another canary in the coal mine, right? So if your canary dies, you should get out of the coal mine, right? Stop digging. Yeah, well, and not even technically plastic. By plastic, you mean PVC, but PVC is actually nylon. But I know you know, and I know you know I know, and yeah, right. No PVC is Apex. I don't know what that is. All right, guys. Yeah, there was a day. Yeah, I'm a little bit tired today. Well, after all of that, it was a long day yesterday, huh? But I had fun. It was good. So I am going to start writing about libertarian capitalism. I even interviewed an actual libertarian. I caught one. Interviewed him for 3.5 hours. Because that's how I roll, yo. No, not on my reading list. Didn't have to do it. Thorough. So yeah, I get to write about libertarian capitalism. See, that's why you go to an Ivy League school, because you need to know this. What? Wait, that guy that no one's going to vote for isn't he a libertarian? Yeah. Okay. Yeah. So, anyways, peace on earth. May the pips be with you. May your profits be above average. Yeah, pick your lines. Watch those 4-hour 21s. There's lots of nice little pullbacks. Have a wonderful day. And it's only Wednesday, right? Or is it Thursday? No, no, we had initial jobless claims. All right, so yeah, so I guess I'm going to see you tomorrow at FX Street. When you come in NYC, you know what? I am so overdue for a trip like that. But since stopping, how do you say it in English? Since I no longer have U.S. clients or work with U.S. clients, that kind of thing. There's just like a lot less need to meet people in New York City, right? So yeah, I mean, I'm so overdue for Nats. I'm so overdue for the Waldorf. I feel like a cousin died or something. A steak at the Bull and Bear, that kind of stuff. So overdue. But the world's changed. That helicopter service I used to take, we talked about it last week or something. That's long gone. I mean, it doesn't exist anymore. So yeah, there's just a lot less need. But I travel now, but it's not to New York. It's traveling to China. It's traveling to the Middle East. It's traveling. So it's all foreigners. But yeah, but we'd have to meet up. Hey, Jimmy, do a Nats, do a Nats run for sure. City always changes too. Yeah, and that's the part of it, right? And I remember, and I'll end on this. I was in New York City, and I took about 10 or 15 people on a limousine ride of New York City that had never been to New York City before. And this must have been 2006, 2005. 2005 is probably right. And we're going around New York City. We stop at Ground Zero, and it's just a giant hole in the ground with wooden walls around it, and it's really humbling. And so while everyone's having their moment of silence, I kind of walk over to the limousine driver, obviously a New Yorker. I'm like, pretty powerful stuff, and he's like, "Yeah, I'll never forget it. Worst day of my life." He says, "Thing about the city." And he gets in, wonderful accent. Tear it down, build it up, move on. So that's what we do at the city. Tear it down, build something better, move on. And you're like, yeah, damn straight. So if you have a bad day, similar thing, right? Tear it down, build something better, move on. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow at FX Street. And if not, I'll see you Monday, eh? Make sure you open that account at TradersWay, right? Don't be a freeloader. Your mother would be disappointed. Cool. Just, hey, gotta ask, right? Take care, guys. Cheers.